Thank you everyone for coming. This is an amazing honor to be up here today. I really mean that. It's crazy to think about how it all started and how you kind of progress through your career and get here. And really think about how did it happen? How much of it's planned and how much of it just occurs through your career and how the career kind of moves along with it. It's interesting to look back and look at the little choices you kind of make along the way, and I've had a lot of those. How little things change your direction, or things that look like speed bumps that you just kind of keep working your way through, and a lot of that started here at SIUE for me. I know when I first came to SIU, looking back at the campus, that was 1978, a long time ago. I didn't really know much about it. I knew it was near St. Louis, and that was going to help looking for a job after graduation. But I knew I had a good business school, great accounting reputation. I was planning on majoring in business and doing something in finance and investing. That was the part of the plan to start with. I also came down here with the opportunity to maybe play some golf. That's really why I came down here. I had a little success in high school and came down and met Harry Gallatin. And if you don't know who Harry Gallatin is, look him up. I mean, he's an amazing career. 10 years in the NBA, 7-time NBA All-Star, coach of the Hawks and the Pistons, coach of the year in '63. So coming down to meet this guy as a senior in high school, trying to make a golf team, was amazing. Intimidating guy. Hands just big as footballs. You'd shake your hand and he'd, hi, how you doing? So the idea that you come down as a senior, try to make a golf team, and then also think about maybe having a career after that. It was a little daunting at the time and kind of still is today. I guess my plan was starting to develop then. Play golf, get a job, have a career. I know a lot of parents and kids today, in high school or even earlier, kind of start to develop their plan and their steps to a career. Back in the 70s when I was looking at colleges, it was a lot simpler to me then. I guess the idea, maybe I was a little naive, but SIU fit the bill of what I wanted. Location, good business school reputation, and play some golf. I knew a couple of the players on the golf team then at the time. I knew another guy who was trying out for the team, Derek Dolans, who was a roommate of mine and passed away from cancer a few years ago. Incidents like that kind of changed the way you look at the world. When I got to campus, I loved the idea. It was Tower Lake Apartments, Cougar Village now. That was great. I didn't want a dorm. I wanted roommates. And then Ed Pinnell was my roommate in college for a few years. I think the idea that when we came down here as freshmen, we came down a little early to freshman orientation to try out for the golf team. I remember moving to Tower Lake, rooming with some of the guys. I remember the Mississippi River Festival was going on, if anybody remembers that. I remember going through the woods from Tower Lake. Doobie Brothers, Harry Chapin, and the Eagles were here the first year. Not bad for just walking through the woods. And I was thinking I had a pretty good plan. I thought SIU was going to really fit the bill. Once school started, I remember I had to have my classes done so I could make my 1 o'clock tee times. And at the time, we could do that freshman year, 8:30 to 12:30, 4 days a week, go play some golf. After practice, we tried to study. I know we ended up at Old Spanky's quite a bit, Ed and a bunch of the other people. And I know every Thursday it started there for our 3-day weekends. But freshman year was a bit of a blur, except for the 10 pounds you add that year, which is true, that I've never lost. I think it's sophomore year, kind of reality starts to set in and the plan starts to change a little bit. It begins to at least evolve with reality. I didn't make any of the golf trips, trying to make the traveling squad of 12, 15 people trying out for 6 spots. The idea that I could still have morning classes all the time didn't start to work out. And I knew I had to focus a little bit more on school, think about the career, and kind of drop the golf thing. And again, the plan kind of started to change. I think SIU at the time made it very easy to meet people. Campus was smaller than it was today. You kind of knew everyone at Tower Lake. And you got to know the people fairly quickly. It was the right size for me. Classes were interesting, challenging, And I thought this was exactly what I needed. First year, second year, and saying I could still get a career here. Some of the classes were really hard. I don't know if it was me, but looking back, it had to be my sophomore, junior year. There was a class called Money and Banking. I just didn't get it. I knew I still wanted to specialize in finance. I realized that some of the conceptual economic stuff might not have been my strong suit, probably still isn't today. But it's funny to think about those classes. One or two classes that you just don't get. You think you're on a career path and say, what if I change my path? We were talking about that around our table. I might be in marketing, I might be in finance, I might be in accounting. One class is either going to steer you one way or the other, and that will have a profound change in your career and your direction. Not part of your plan, but it just changes with reality. I guess that was one of those points where if I would have taken another direction, I probably wouldn't be doing what I am today. I mean, 30 years later, I look back and running money for the sixth largest bank in the US, PNC, with PNC Capital Advisors. And to think that a money and banking class that I didn't get could have said, I don't know, I'm going to end up in sales. It would have been fine. Everybody ends up in sales. But we were talking about that around our table. You think you're in finance, you think you're in accounting, you think you're in IT. You always end up in sales. I mean, you're either retaining clients or talking to clients or promoting the university. In our place, promoting our strategies or doing quarterly updates for them. Everyone ends up at least being in presentation, let's put it that way, or sales. Just keep that in mind as we go forward. Fast forward a little bit to grad school. That was 1993. I knew I needed a little bit more in the undergrad to kind of separate you from the crowd and what was at the time a really tough economy. You might not remember them, but late 70s and early 80s were also very tough times here in the US. Unemployment was about 7% when I was graduating. Fed's funds rate, 20%, a little bit different than today. Bank failures were going very strong in 1982. The Fed passed some sweeping bank reform called Garn-Saint-Germain, kind of the Dodd-Frank bill of its day. 1983 alone, 50 banks failed. Easiest the most since the Depression, which was only 43. So we just went through the same cycle again. 1984, the seventh largest bank in the US failed, Continental Illinois. Looking back, Continental Illinois is the first time you heard the word too big to fail. It got a $4.5 billion bailout in May of that year. If nothing else happens over time, history repeats itself all the time. Too big to fail, Dodd-Frank, it just happens and happens. To say the least, banks weren't hiring much when I graduated in '82. Most of the other opportunities were insurance, sales, or stock brokerage and things that just didn't have a long-term interest to me. Could have been great careers. Just wasn't what I wanted. So suddenly grad school seemed like a great idea to me, and maybe the economy would be better when I got out and had a chance. I know everybody says that. The economy's not great, let's go to grad school. It works. It worked for me at the time. I think it still can today, but the idea that first leap into the job pool is always that challenging, what am I gonna do? So grad school wasn't in my original plan, but all of a sudden it seemed to be a very good idea to me. Little did I know that kind of the two most important events of my life happened the first year of grad school. First, I met my wife, 29 years, when she was a senior in the accounting program, and I was sitting in the accounting office trying to cram for a grad school accounting exam. Seems like a long time ago now, especially the accounting aspects. Doris tells me that she wouldn't have liked me much in college, at least my undergraduate years. I'm pretty sure she wouldn't. She was one of those who studied on Thursday and Friday nights at Tower Lake, and she was always telling the people kind of partying around there, Ed and I and others, to keep it down. I got studying to do. She was an accountant. So she was right. She was always smarter than me, and she still proves to that and tells me that most days. So as far as the second most important thing in grad school, I met the president of a small investment advisory firm. His name was Mark Deshane. He was getting his master's degree at night. We had just met as students. We talked about during the finance classes and wanted to find out more about what he was doing. And I thought it sounded like an interesting career. He had a 6-person advisory firm in Clayton. I asked him, I thought it was an interesting business, would have any opportunities, and at the time he didn't. I kept looking, kept coming back to him. He said, well, maybe in a couple of months I'll have an opportunity for you. So I kept looking at other jobs. Things didn't come up exactly what I wanted, but I thought if I stuck around and persistent enough, I could maybe join his firm in Clayton. That was 1985. I joined that firm as an assistant analyst, and I have been incredibly fortunate not to have had to look for a job ever since. I've had to fight very hard 3 times through 3 different bank mergers, and have been very lucky not to have had to look for one. I think that's rare today, very rare. And I'm not saying it's the right way to do it, but I have been very lucky in that career path I took. I mean, over 28 years, 20 years ago, we were trying to expand that firm. And we hired 2 more SIUE grads at the time, James Miniman and Lisa Teeter, who have both played pivotal roles in the evolution of our 6-person investment team today. And the idea that 3 SIUE grads can be together for almost 20 years is crazy in the investment industry, probably any industry. But I think that really says something about the graduates and the people SIUE attract. They're flexible, they're intelligent, they're grounded, and they're willing to kind of roll with the times as things change, because the investment business has changed a lot over 20 years. I wound up being president and chief investment officer of that firm, Investment Counselors, until we sold it to Allegiant Bank in St. Louis in 2002. That was also not part of my plan, not my wildest imagination, where we sell to a publicly traded bank. But that's when the roller coaster also really began. It created a lot of opportunities for us, and it worked great for 2 years. And then in 2004, Allegiant Bank was purchased by National City, a mid-sized bank based out of Cleveland. And once again, not part of the plan. The plan's actually been tossed out the window at this point. And I kind of entered a very unknown industry to me, large institutional money management firms, where I was unsure about how it would all work, whether they would even need us at this new firm. It was a bank merger. We were in the advisory unit. Didn't even know National City had one. Would we be able to stay in St. Louis? Do they need our product? What would happen to our team? I think fate kind of took over and circumstances started trumping the plan. And that was after 15 years or so. We did become a part of Allegiant Asset Management, part of National City at the time. They needed our small cap product to fill an equity hole in their offering of funds. And the first thing they did when we got to National City, the day we got there, was to start our mutual fund. So it's almost got a 10-year track record now. It's about $300 million in assets, and we've got about $700 million in our small cap product after starting with less than 100. So the idea that we got more and more distribution, our careers changed, and we just kind of stuck with what we were doing and have been incredibly fortunate to kind of fill these holes along the way. I didn't have any input into it. It didn't part of the plan, but the idea of where we end up with a great opportunity, just be flexible and be having something someone else needed. Our performance was good and it filled a niche. Seemed like we've settled into a very good situation at National City until the financial crisis hit 5 years ago. Our parent company, National City, kind of got caught up in that a little bit and eventually sold to PNC Financial, a bigger bank based in Pittsburgh, in 2008. Once again, no plan, little control, uncertain future for myself and the investment team. As it turned out, it was an ideal situation. When we combined with PNC Capital Advisors, they needed our small cap strategy again to fill one of their lineups. Performance had been very good. We've been doing a good job, and we really fit into that unit as well. Now we're getting more and more internal distribution. We had external distribution. We have this new mutual fund. And all of a sudden you're going, I've done this for 28 years. And it really wasn't part of the plan. I wanted to be in the investment business. I wanted to get an education. I wanted to be near St. Louis. So I have been more than fortunate in that 28 years. I've been able to take full advantage of all the changes that have come over, especially over the last 10 years. And at the first decade, I thought I had it all figured out. Join a small advisory firm, stay in Clayton, have a nice life. I believe a lot of this came down to really the base education that I got here at SIU. The people that you meet, and I still work with today from SIUE, and that still have a direct impact on what I do. So the idea of coming back here, talking to you, talking about career, and kind of keeping people motivated, giving them an idea this can work, is something I really enjoy doing. I still enjoy my job. I am part of an amazing investment team that I am fortunate to work with. I still get a chance to get over to SIUE quite often, many times on my bike, on the bike trails around here. And every time I'm here, whether it's for an event like this or on my bike, I proudly look around this campus and think to myself, wow, this place has really turned into something amazing. It's changed and grown just dramatically. The new buildings, the new dorms, there's even a Caldi's downstairs. That wasn't part of the plan. But I think if you talk to SIUE and you look back, and they had a plan and a vision of where this was going to go. And I'm sure it's kind of changed and modified itself also along the way. Have a plan, be flexible, have those basic skills, and make some good connections here. And let that kind of career progress from there. Sometimes you just have to roll with it. Hope sometime everybody gets a chance to be up here and tell their story. I would advise you to have a plan. Don't worry too much about the details. It will change a lot along the way, and enjoy the ride. Thanks, everyone.
We'll open the floor to questions for however long you'd like to stay.
Sure.
Take advantage of the resource while you have it. It's just like class, the first person. Come on now. You can't leave until we have at least 5 questions.
Yes, sir.
It says when you first, Roger, it says your team currently deals small cap, mid cap, and all cap. And you've been primarily a small cap kind of guy most of your career.
Yeah, that's evolved through the career as well. The all cap is probably one of our oldest strategies. It just wasn't used at National City, and now we're kind of relaunching that strategy. Not to get too much in the investment weeds, but we kind of do the core space, all cap, mid, and small, where a lot of firms do the horizontal of growth, value, core, and we have teams that do that. But we kind of have that center stripe so it fills out all mid and small, and actually we have a concentrated small cap also.
That's what I was going to ask. Do you have small cap value and small cap?
Yeah, we don't do growth and value. We think we do the best of both. We kind of do the private market valuation approach, and won't get into all that, but we're big cash flow managers. We don't believe in earnings and all that kind of accounting things. Sorry. Yes, sir.
Quick question. I'm in my last class in the MBA program. We just finished mergers and acquisitions. And I'm curious, with your experience in acquisitions, what do you feel made it successful, and what do you think were the stumbling blocks that caused some delays or whatever to make it more successful?
I think mergers are hard, and from an investment standpoint, you know, we have hurdle rates and things that we want companies to be doing when they're making acquisitions. Personally, career-wise, we were in a line of business that was kind of an ancillary business to the bank mergers. So we were not an afterthought, but we weren't a huge piece of the puzzle. So the idea that when you merge into these companies, they have maybe different objectives, and we've just been really fortunate to go through those. But we think mergers and acquisitions from our companies and the companies we own, they do a great job of integrating them. You know, if they're above their cost of capital and the return of what they're acquiring is above their core business, we love those. But that's something that management, you know, kind of has to have a track record to do, and that's something our team looks for quite a bit. We love M&A. It's a great deal, and we've had 3 takeouts last year. We haven't had any this year yet, but it's, I think there'll be a lot more to come.
Just as a quick follow-up, my sister was with A.J. Edwards, and now is with Wells Fargo, and went through all that evolution. And I'm curious, she said that the biggest problem was cultural changes, and the people who stayed and rode the tide
Yeah, the cultural changes are huge. I mean, just going from a small bank here in St. Louis to National City, which was, it's the 8th, 9th, 10th biggest bank, something like that. And it was a good fit, but the cultural difference was more from the bank to an investment advisory firm. I nothing against bankers. I say I'm not a banker. I'm owned by a bank because there's just a different viewpoint. There's a different risk tolerance, and we're all about taking and managing risks. Banks are the same way, but it's a different layer. We like to move in days and maybe a week instead of weeks and months. A.J. Edwards is a great firm. We still manage a lot of money with Wells Fargo. We're about $160 million with them, and they're doing a good job as well. But I know it's been huge cultural changes. But there's nothing in the financial industry that hasn't been through that. That was a knock on us early on with the first merger of, oh, you had a merger, we need to wait. Every consulting firm, every brokerage firm, almost every bank's been through something. So it's a question of how you handle those and manage and how flexible you ought to get through that. But the cultural differences are huge, and they do not change overnight. They can't. And that's something there's always continual battles about. Yes?
We have a number of students over here, and if you'd be kind enough to share with us your thoughts and your words of wisdom about how do our students prepare for the uncertain times? We are going through some difficult economic times, and in public perception, there's a lot of gloom and doom about opportunities there. So how do we get our students to think about that? How do we get our students to prepare for themselves? And how do we get our students to be competitive in what might be an uncertain future?
I think the idea is just your basic skills. It goes back to just get a good, broad-based education, know what you want to focus on. But when was the last time were great times? I mean, there's always something uncertain. And 24-hour news channels, CNBC, there's always noise. They have to make more out of things maybe than they are, but it's always uncertain times. And that's kind of what you use as your advantage. I mean, there's companies from an investing standpoint, they say, well, they're not spending money, they're holding back because of the uncertainty. When was the last no uncertain time? I mean, so companies that are able to take advantage of low interest rates and do deals and things like that are taking advantage of it. Students can do the same thing. I mean, be confident in what you can do, have some skills, and have something somebody needs. And we were talking about it again. It's not just sales side, but you got to be able to sell yourself and position yourself and have something people need. And we call it the hockey analogy. You can't have a skill that you need today. You need a skill that someone's going to need in a year, 3 years, or 5 years, and kind of think ahead, play some bets. But you have to kind of take a little bit of risk. I think there's plenty of opportunity out there when you look really hard. And when I came out, I'm an undergrad, it was 7% unemployment, high interest rates, bank crisis, and all that stuff. Yeah, I went to grad school. But that just kind of reloaded the toolbox and met someone that, had an opportunity for it. So it's the networking skills, it's just being available and it's knowing what you want to do. And if you find someone, bug the hell out of them. Say, I want to work for you. It's amazing people. We just hired our first time we hired our 6th analyst. And it's amazing the presentation and the interview skills. When someone comes into your office and wants a job and they don't ask for the job. You have to pull things out of them. They're not there to sell themselves. I mean, and that's either the first job or your second job or your last job. I mean, if you're not confident enough in yourself, someone else isn't going to be confident in you either. They'll find someone that is. So it kind of goes back to the thing. You're always selling something, but it's selling your skills, selling your confidence, and having something people need. Yes?
Two things. First of all, I wanted to thank you for your comments about the flexibility and things like that, because that's the uncertain times is one of the key things that I try to teach my MBA students in our decision-making classes. Most of the decision-making we make is under uncertainty, so we've got to be very flexible and adaptable. So I really appreciate that. It feels like I'm on target then in teaching them. The second thing is, having worked in the 80s in the financial services industry in New York City, one of the things that drove me screaming from the financial services industry was, working for Drexel Burnham Lambert.
Okay.
Says everything right there. And then, of course, I went back to my MBA, right? Because you get laid off, you might as well do something. So in businesses so that we're not just thinking about compliance, because that's Sarbanes-Oxley, compliance kind of problem.
Yeah.
How do we get the culture to that place, particularly?
Well, I think business, what it is, it's just you're supplying something that someone needs. So it's that relationship between you and your customer, how close that is. And I think it has to start at that ground level. I've known Ed Pinnell since college, and he has clients, and it's his relationship with them is the reputation that builds it with the wealth group, and the wealth group grows it for PNC. Then if you have enough people doing the right thing, it ends up being a good reputation. It's kind of weight of the evidence to some degree. There's debates about what ethical lines are, obviously. J.P. Morgan, Jamie Dimon, I think he's done a spectacular job. But there's people that, the whale and all the trading and all the issues with that maybe cloud that. I think it's leadership, it's culture, but it's also down at everybody at the base level dealing with the customers. And the customers are going to make your reputation. And I know that when we were a small shop. I knew every client we had. Their reputation of our firm was based on who they were seeing or talking to. And if you said, I'm going to do something, do it. And if you say you can't do something, tell them. Hey, I can't do this, here's why. Just be honest with them. But that's where it gets to. And as far as corporate cultures, I think the competitive nature of business, there's always a line. It's a big, wide gray line and not a black line. And that changes a little bit over time. It kind of depends on where the government is, where the regulation is, and that also swings back and forth. It's not new. It's been going on since the 80s. It went on way before us. But yeah, the finance industry is an interesting place now. I think it's one of the most needed industries there is. I think part of the problem came out of it was because it was needed so much and maybe too much. And just the concentration of it in some very big banks at the time. But government had a big impact on it as well, and that's a whole other conversation. Yes?
Throughout your career, other than just the general flexibility, what skills have you found to be the most applicable throughout?
I think it goes back to the communication skills, interpersonal skills, things that you just can't really maybe learn that easily, maybe even harder to teach. But the idea of being confident enough and being able to sell something yourself or a product, everyone's in sales. Again, I've talked about this 2 or 3 times. None of my background was in sales. But now when we're out seeing consultants and making finals presentations, and once a year you've got to see, the biggest clients want to talk to the guy in charge, you end up being in sales or marketing or whatever you want to call it. So you just have to find a way to get comfortable with that, know your story, and again, just be totally truthful with everyone because it'll come back around. But it's those soft skills that matter a lot that you can't quantify.
Discounted cash flow model is pretty important.
That worked. Yeah, we've got a little different perspective, and it's not to go in depth on it. We just look at cash flow measures instead of earnings with the idea that's the way the private world's done. Wall Street's all about earnings and metrics like that, and we just think that the accounting between them is so different. You can't compare sectors and industries, but you can kind of if you peel that all back, and that's made a big difference in our career. That's something we've done for 28 years now that makes us a little different, have a different perspective. That when we talk to our companies that we own, we speak their language. Sales, margins, asset turns, capital deployment. Our marketing line is 89 days a quarter they do it our way, and one day they have to do an earnings call. Because the earnings call is just an output of the income statement. It says nothing at all about the balance sheet it took to create the cash flow and ultimately the earnings after some accountant goes through and says this is the way we're doing it. We got to level the playing field to make those comparisons. So we're about as bottom-up, generalist, just stock pickers as you can be these days. And that with a long-term perspective of 4 or 5 year holding periods, we're a lot different than most of Wall Street and a lot of money management firms. And that's what really corporations and a lot of people find, I think, appealing about us. It's helped.
Do you still find time to play a little golf?
I don't. I think I played twice this year. I'm out on my bike more than anything else. But yeah, I just haven't had time to play golf in probably the last 10 years. You get peaked when you're in high school, so that's not the best sign.
Any other questions?
Appreciate your time. Thanks for having me, guys.
Thank you very much.